guys, it's Stock Curry, and we're starting to see cracks in the financial industry, including layoffs, risky bets going awry, and defaults. In today's video, I'm going to explain what's happening and why we might be headed for another financial crisis. So let's get into it! Let's start with the housing market. The housing market slowdown is starting to show up in shipping data from China. Shippers say shipments of appliances and furniture and home decor is slowing down from both China and Vietnam. This is why a slowdown in the housing market can trigger a recession. As fewer people buy homes, there are fewer people who are going out and buying new appliances for those homes, new window decorations for those homes, new furniture for those homes. All of this slows down. And as that slows down, it causes a recession in the businesses that are providing those products. And this ultimately can trigger an overall recession in the entire market, just because of how large the housing market is and how much money gets poured into it. So unfortunately, a slowdown in the housing market is now starting to show signs of a recession in a lot of other businesses, in the businesses that actually provide the goods that go into houses. Now, pending home sales did post a surprise increase in May. However, that was likely due to a brief pullback in mortgage rates. Just like any economic data, it's going to fluctuate, so don't think that just because we got 1 month of good data that this means the slowdown in the housing market is over. That's not the case at all. This is most likely just a very temporary rebound before the home sales continue to decline over the next few months. Now moving on to crypto, one of the most prominent hedge funds just defaulted on a $670 million loan. The hedge fund is called Three Arrows Capital, and they're one of the largest crypto hedge funds in the world. Unfortunately, as hedge funds start to default on loans, meaning they're not able to pay back the money that they borrowed, their margin, if you will, this can cause a triggering effect, because if they're not able to pay back their loans, then what's going to happen is they're going to be forced to sell off their crypto assets. As they're forced to sell off their crypto assets, that's going to cause a major decline in cryptocurrency markets. And eventually, the fact is, a lot of this money was actually borrowed from banks. A lot of banks were allowing these hedge funds to borrow funds in order to go buy crypto. So this actually is going to hurt banks as well. Whoever it is that actually lent them this money. It may have been JP Morgan Chase, Bank of America, Morgan Stanley, Credit Suisse. We don't know who. But whoever lent them this money, this is really going to hurt banks. And as more and more of these hedge funds start to default on their loans, it's going to cause more and more issues for the banks that lent out this money. In other crypto news, more hedge funds are now betting against Tether by shorting the quote-unquote stablecoin. Now, Tether is a stablecoin just like Terra USD was a stablecoin. The main difference is Terra USD, the stablecoin that went from $1 to like $0, that one was what was called an algorithmic trading coin, meaning it traded off an algo program to kind of keep it stable. Tether is completely different. Tether is actually backed by real assets. So Tether is supposed to be safer. It's not supposed to go down. Tether has supposedly real assets such as US dollars backing it. Now, the problem, though, is that Tether doesn't actually have US dollars backing it. They say they do, but they don't. They've actually gotten in trouble in the past for lying. They've had lawsuits. It's been a major problem. The way Tether is actually backed is some US dollars, but also gold, and the biggest portion of it is actually corporate bonds. The corporate bonds, or short-term loans from corporations, is where Tether gets most of its money. Now, here's the major problem, is as we enter into a recession, we're going to see more and more corporations start to default on their bond payments, just like we saw with Three Arrows Capital. So hedge funds are now betting that more and more corporations are going to default on their bonds, and that's going to hurt Tether and cause Tether's assets, their underlying assets, to go down in value. And that's why hedge funds are now shorting Tether. Now, you may say, well, that's fine. There's no way that's really a problem yet. But check this out. Rising rates and a tech pullback have pummeled convertible bonds. An overall index of these short-term loans has lost 18% this year. So it stands to say that Tether's holdings in these bonds is possibly down by as much as 18%. And that's why hedge funds are starting to short it. Again, this is all tied together in the financial industry. In 2008, we didn't have crypto. We had other problems, obviously, mainly subprime mortgages. But there was also a lot of risky bets that banks were making during the 2008 financial crisis. And those risky bets did not pay off. They collapsed, and that's where a lot of banks went out of business, and we had major problems in the banking system in 2008. Well, today, we still have risky bets, only this time it's in crypto instead of the housing market. And as crypto continues to crash, banks are going to continue to suffer more and more. And it's not just banks that are suffering. Pension funds are taking on riskier bets, trying to make up the losses that they've incurred so far this year. Pension funds are running out of money. They don't have the money to pay out the pensions that they're supposed to pay out. Now, pension funds are supposed to invest and grow their wealth over time. The problem is, as the market has gone down, pension funds are losing more and more money. So what they're doing is they're trying to take on riskier and riskier bets, trying to essentially make up their losses or double down, trying to recover losses. And the main way that they're doing this is through margin. They're borrowing large amounts of cash from banks in order to invest in the market. Well, we already saw what happened with a lot of other people who have done margin in a bear market. Quite simply, they default, they go out of business, they get margin called, and this is not good for pension funds. As pension funds start taking on more and more debt, trying to bet on these risky investments, if the stock market continues to go down, and if crypto continues to go down, which all signs point to it will continue to go down, then unfortunately all this margin is going to get wiped out. The pension funds are going to get wiped out, and the banks that lent them the money are going to get wiped out because they're not going to get their money back. So this is all just a really bad situation for the financial industry. And what does all of this mean? Is this actually showing up in banks and investment banks? Obviously, hedge funds and pension funds are getting killed right now. How are the banks doing? Well, unfortunately, investment banks such as JP Morgan, Goldman Sachs, and Morgan Stanley are not doing well, and Wall Street layoffs are now likely. So altogether, we've got hedge funds and pension funds making risky investments with margin as the market continues to go down. We've got hedge funds defaulting on loans, and we've got investment banks about to do layoffs. All of this is a major sign that the financial industry, our banking system, is in major trouble. Now, we're at the very beginnings of this. We haven't seen major collapses. We haven't seen banks go out of business. We've seen hedge funds go out of business, which is a start. We haven't quite yet seen this trickle down to the actual banks, but believe me, it's going to get there. Right now, we're kind of in like the end of 2007 or very beginning of 2008, where all these cracks started to show up. People realized things were probably about to get bad, but nobody could really predict just how bad it was about to get. And that's where we are right now. We're kind of in the beginning of 2008 when we couldn't even call it a financial crisis. We just saw that there were some issues. We thought maybe we could fix them. That's where we're at right now. So unfortunately, the same issues that showed up at the beginning of 2008 are now showing up again. Only, of course, this time a very different cause. This time it's crypto. Last time it was the housing market. But unfortunately, these same issues are showing up. And of course, we already know that on the consumer side that we are seeing a massive amount of defaults on car loans. That is going to trickle over into the housing market. We're already seeing a slowdown in the number of houses being bought. We do expect the number of defaults in houses to increase as time goes on. And it's a slow moving. It's like a train, right? As trains start to get going, they start very, very slowly, and they start building up momentum and building up momentum. Their speed starts to increase, and the faster they go, the harder they are to stop. And that's where we are. Right now, the train just left the station. It's just getting going. It's speeding up. And as time goes on, as the rest of this year goes on, as we get into 2023, things are just going to get worse and worse, and it's all going to balloon. The slowdown in the housing market, the slowdown in crypto, the defaults from hedge funds, the layoffs from investment banks, all of this is going to balloon at some point into a major crash. Believe me, we're not there yet. Not even close. The stock market has a lot further to fall. We are nowhere near a bottom in the stock market, which is why once we get through this little rebound rally this week, I plan to load up on put options because I know what's coming. And believe me, this next round of earnings could be the trigger for another major drop in the stock market. Because so far, most companies, some have, but most companies have not yet lowered their forward earnings guidance. Analysts have not yet lowered their earnings guidance. I talked about that in yesterday's video. So until the analysts and these companies start lowering their earnings guidance and get more in line with the recession that we're about to enter into, we just are not going to see the stock market hit a bottom. We are so far from a bottom, it's not even funny. I would even venture to say we're not even halfway there yet. So be careful. If you want to make money with us, it's really easy. Just come join the VIP Discord. Now, there's no guarantees, right? We don't make money on every trade. I'm not saying that at all. No guarantees you will make money. But my portfolio is up more than double so far this year. And today, we just made a 105% profit on a QQQ call that we opened last week, closed today. And we made a 132% profit on an SPY call that we opened last week and closed today. If you want to make profits like this in your portfolio and you want to make money as the market goes down, then come join us in the VIP Discord where we profit day and night. You can come join the We Profit Day and Night VIP Discord at stockcurry.vip/getvip. That's stockcurry.vip/getvip. I would love to have you come join us, make 132% profits in your portfolio also. Now, unfortunately, I do have one last piece of devastating news to leave you guys with. We know that this entire slowdown in the economy was ultimately caused by a rise in inflation. And of course, that rise in inflation was caused because the US government printed trillions of dollars worth of cash. In fact, some numbers estimate that 80% of all of the currency in the United States today was printed in the last 3 years. Now, this is absolutely insane. And with the amount of currency increasing by 500%, it goes to show that inflation went up along with it. Obviously, the answer to fix inflation is to stop printing money, right? Right? California is now sending out inflation relief checks up to $1,050. Printing money is how inflation went up. You cannot fix inflation by printing more money.
What the hell is wrong with you people?
I don't think our politicians are ever going to get it. Inflation's going to continue to rise. It's going to continue to go up. It's not going back down until something major changes in the mindset of our politicians. All right, guys, I hope you have a lot of success trading. Don't forget to hit the like button and subscribe if you haven't already. If you're on YouTube, go ahead and click the bell icon and click all, and I will see you tomorrow.